Hello, friends. Today we're going to focus on the numbers. We'll show you how we see the development of Lotus, not just right now, but over the next 3 years and beyond. This will give you a clear sense of the scale we're aiming for and help you understand how grounded and strategic our team is in positioning Lotus within the DeFi space. What we're presenting isn't just raw data. It reflects our approach to building long-term value. We're already laying the foundation for sustainable growth in the years ahead. Let's begin with the most important part, our go-to market and marketing strategy. The first thing I want to say is this: our goal is to position ourselves clearly and confidently as a meaningful part of the DeFi community. We're fully committed to investing in promotion and visibility. Our launch goal is to allocate up to $15,000 in marketing budget during the very first month, starting this September. The next target is to scale our marketing spend to $100,000 per month. And this figure is absolutely realistic. More importantly, we plan to fund this entirely through the commission revenue generated by our trading terminal. We've built the model so that terminal income enables us to scale marketing exponentially without needing outside capital. So, which channels are we focusing on? Partnerships with leading blockchain projects, collaborations with top crypto influencers, joint campaigns with meme launchpads, other partnerships within the DeFi ecosystem, and of course, growing our own social media presence: Twitter, Telegram, YouTube, TikTok, and more. This way, we're making sure Lotus is visible across all the key channels that drive attention in today's crypto landscape. Our analysis of the crypto industry shows that the average cost of acquiring a new user for a crypto project today is around $5. That's the benchmark we've used in our budget calculations. The next goal is to bring that cost down. As Lotus becomes a recognized brand with growing organic traffic, strategic partnerships, and strong social proof, advertising will become more native and far more effective. At that point, with a $100,000 monthly marketing budget, we'll be able to attract significantly more users, bringing the cost per acquisition down to about $1. We've already integrated these assumptions into our financial model, both for new users coming from external traffic and those joining us early. And when we talk about our audience, we measure it in terms of MAU, monthly active users. That means users who connect their wallet to the Lotus terminal and complete at least one trading operation each month. We've also projected how our user base will grow over the next 5 years. Our model is built on confident, scalable growth. By the end of 2025, we're aiming for 9,000 monthly website users. In 2026, 40,000. In 2027, 117,000. And by 2030, 1 million users. That's our strategic goal: 1 million people who know, trust, and actively use Lotus. This kind of growth trajectory isn't just theoretical. It's been proven by other successful DeFi projects. We're not reinventing the wheel. We're following a proven path, but with our own advantages and a far more advanced tech foundation. Our mission is to secure our place in the market and claim the share that we're fully capable of owning. So why do we need all this data? First of all, because our projections are based on real traffic numbers from Lotos.io. The goal is simple: convert website visitors into wallet-connected users, and then into active traders on our terminal. In our model, we've assumed just a 6% conversion rate. That's below the market average. We've taken a deliberately conservative approach because we don't want to build illusions. Why take that route? Because it gives us a safety margin. If we reach a 10 to 12% conversion rate, as many successful crypto projects have, then every projection you're seeing here can be multiplied by 1.5 to 2 times. In other words, what I'm showing you today is our baseline scenario, and the real outcome could be significantly better. Once new users join, including those already with us today, we expect each of them to generate an average of around $7,500 in monthly trading volume on the Lotos terminal. And it's important to emphasize, this number isn't pulled out of thin air. We've analyzed data from dozens of comparable projects, and we see that active trading volumes typically range from $3,000 to $30,000 per user per month. So $7,500 is a realistic and well-balanced benchmark, not an inflated estimate. At the same time, we've set ourselves an additional goal: to make the trading experience so smooth and efficient that each user can eventually increase their monthly volume to $15,000, $20,000, or even more. That's the key to exponential growth. The easier and more rewarding the platform, the higher the engagement, and the higher the trading volumes. And that's what enables us to confidently forecast total trading volume across our entire user base. And that's exactly what we'll cover on the next slide. Now let's move on to the forecast. The launch is set for September. That means We're less than 2 months away from our first real results. Our initial target is clear, $25 million in trading volume by the end of 2025. From there, we expect exponential growth, driven by audience expansion, as I mentioned earlier, and by the increase in average trading volume per user. According to our model, trading volume should reach $861 million in 2026. And in 2027, it's projected to grow fourfold, reaching $4 billion annually. At first glance, these numbers may seem ambitious, but let's take a step back and look at the broader picture. The DeFi market is evolving so rapidly that volumes like these are quickly becoming the norm. $4 billion a year is no longer a ceiling. It's the new baseline for serious DeFi products, especially for a platform like Lotos, which offers manual trading, semi-automated strategies, and fully automated trading systems. With this full suite of tools, users can increase the number of profitable trades, even without constantly being in front of a screen. You simply set up your strategy, and the system handles the execution for you. That's why we don't view $4 billion in 2027 as a limit. We see it as a realistic minimum. And under favorable conditions, it could easily grow by 1.5 to 2 times that amount. To better understand the scale of our vision, let's not look into the future. Let's look at the current reality. Right now, the DEX market sees a daily trading volume of around $17.5 billion. Multiply that by 365 days, and you get roughly $5 trillion in annual volume. Now compare that to our target, $4 billion in 2027. That's just 0.08% of today's market volume. In other words, we're not chasing some unrealistic dream. We're aiming for a tiny slice of an already existing market, one that's continuing to grow rapidly. In fact, our internal goal is much more ambitious. We're not looking to capture just 0.1%. We're aiming for several percentage points of market share. And with the technical foundation we've already built, that's absolutely achievable. Reaching $4 billion in trading volume by 2027 isn't just a forecast, it's a clear, measurable milestone, backed by real progress and current momentum. Let me say it again, $4 billion is our base case, our minimum target. It's the starting point, not the limit. So what does all of this give us? First and foremost, a financial safety net and long-term resilience. With every trade made on the platform, Lotus earns a small commission, and that's the core of our financial model. For manual trading, the commission is just 0.25%. For automated strategies, up to 1%, covering the full set of features. These commissions are accumulated into the project fund, creating a sustainable budget that allows us to grow independently, without relying on external financing. Our main objective is to ensure long-term financial stability, and the key tool to achieve that is liquidity. So, what is a liquidity pool? It's a pool of funds locked in smart contracts, used for trading, and also for helping stabilize the price of our token, LTS. Our goal is to make the token predictable and resilient, so it's not vulnerable to sudden drops. We don't want our holders to stress over volatility. We want LTS to be reliable and liquid, on par with the world's most trusted assets. Our liquidity plan looks like this. In 2025, $800,000 in the pool, USD plus LTS. In 2026, $17 million. In 2027, $100 million. And if you compare us to most DeFi projects, you'll notice something important. Very few can offer a liquidity pool this deep and this well-balanced. But that's not all. Up to this point, we've been talking about the liquidity pool. Yes, it's a critical part of the token stability, but our vision goes further. We divide the project's total revenue into 3 key areas. As you can see in this chart, 42% of all revenue is allocated to the liquidity pool. That's our financial cushion, the engine that keeps LTS stable. Then, 21% goes toward token buybacks. This means Lotos itself will actively repurchase LTS from the market, creating demand and supporting the price. So what does that actually do? First, it helps increase the token's value over time. Second, it builds trust, because the team isn't just making promises, we're financially invested in the token's long-term growth and stability. And if you're a long-term holder, this model directly benefits you. Your assets become more stable. The price of LTS grows gradually and confidently, without artificial pumps. And finally, 37% goes toward development, expanding the team, launching new features, and of course, continuing our global marketing efforts. In short, everything that makes the product stronger and more scalable. Now here's something important. These revenue allocations aren't fixed forever. Token holders can vote to change them. Why? Because Lotos is a DAO, A decentralized autonomous organization. If you hold LTS tokens, you have a voice. You can vote and influence the project's direction, including key decisions like increasing the liquidity pool, adjusting the buyback allocation, or shifting more funds into development. All of this is decided collectively. And this isn't theory. It's already built into the smart contract. So in the end, our model is living, flexible, and community-driven. You're not just a token holder. You're a partner in building the future of Lotos. Friends, everything I've just shared with you is made possible through ownership of the LTS token. It's more than just a digital asset. It's your key to the Lotos ecosystem and a real way to be part of its growth. I've shown how we plan to scale this project through active marketing, increasing brand awareness, and reinvesting into expansion. These aren't just words, they're actions already underway. And today, at the very beginning of this journey, right here in 2025, you have a chance to join us. You can purchase the token, take part in voting, contribute to discussions, and become involved in shaping the project's future. You can already jump into our community chats, share your ideas, leave feedback, and watch your voice make a real impact. Because Lotos isn't just our product anymore, it's yours too. Everyone who joins becomes part of the team. Together, we're pushing this project forward. You can already start beta testing. Many of our early users are actively trading on the terminal and seeing real results. What's more, we've already started generating commission-based revenue. The Lotos business model is working, and it's confirming even our boldest hypotheses. Thank you for being with us, and we'll see you again very soon.